Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Sellas Life Sciences.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. What we're looking at here is a late-stage oncology company. And the whole investment thesis, really, it's built on a dual asset profile.
A dual asset profile, meaning it's not just a one-trick pony.
Exactly. The entire story hinges on two very distinct compounds. First, there's galinpepimut-S, which they just call GPS.
Okay.
And then there's small molecule inhibitor, SLS009, the success of either one.
Well, it just fundamentally changes everything for the company.
That's the real story, isn't it? It's about managing these two massive clinical bets at the same time. And when you look at what could happen soon, I mean, the volatility, the potential explosion, all eyes are on that lead asset, GPS.
That's the one. It's the immediate binary factor.
And it's in a phase 3 trial, the REGAL trial. Correct. GPS is designed as a WT1 targeted multipeptide vaccine. The key here is the indication they're going after.
Right.
It's a maintenance therapy for patients with acute myeloid leukemia, or AML. Specifically, patients in their second complete remission, CR2.
Which sounds incredibly specific. High value, but a niche. Why is that specific group so important?
Well, it really connects to the relapse rate. It's just tragically high, even after a patient gets to CR2, meaning the disease is undetectable after all that treatment.
The odds are still against them.
They are. The relapse rate is notoriously high. So there's this massive unmet need for a non-toxic therapy that can just extend survival without destroying their quality of life. That's the gap GPS wants to fill.
Okay, so that's the setup. But the urgency, the reason everyone is watching now is because it's an event-driven trial.
Exactly. The final analysis happens when they hit 80 events.
And where are we on that count? Why is the timing such a big deal?
It is imminent. The last update had them at 72 events. So they are very, very close to locking the data. And what's so fascinating, what's driving all this positive sentiment, is that the final events are coming in slower than expected.
And in this case, slower is better. Why is a slower death rate a good thing?
Because in an overall survival study, a slow event rate is a huge directional signal if patients are living longer than projected.
The total number of events, which in this case are deaths, just takes longer to pile up.
Precisely. It strongly suggests the drug, GPS, is working better than the placebo arm.
That feels like a powerful clue. But I have to ask, are we maybe reading too much into a blinded data set? There's always a risk there, right?
Oh, absolutely. There's always risk in any kind of interim look.
Yeah.
But when you couple this slowing trend with the drug's mechanism, I mean, it's a specific immune response. It gives experienced investors a real reason to pay attention. The market is definitely seeing this as a sign.
Okay, so GPS is the explosive near-term catalyst. Let's pivot to the second asset, SLS009. This is the part of the story that reduces that all-or-nothing risk.
Right, the pipeline diversity.
What is this drug, and how does it actually work?
So SLS009 is a differentiated small molecule. It's a CDK9 inhibitor.
Okay, and what does CDK9 do?
You can think of CDK9 as an enzyme that, well, it keeps the on switch flipped for cancer cells. It prevents them from dying off naturally.
So it's stopping their programmed cell death, apoptosis.
You got it. By inhibiting CDK9, SLS009 basically forces those cancer cells to shut down and die. It's especially effective in cancers that have grown resistant to other treatments.
The mechanism sounds great, but what about the results? What did the recent data actually show?
The phase 2 data, well, it was highly successful. This was in relapsed refractory AML. They combined SLS009 with the standard azacitidine regimen. Across all patients, the overall response rate, the ORR, was 46%.
46%. Is that good enough to really stand out?
It's good, but it gets better. When you zoom in on the most relevant group patients who'd only had one prior therapy, the ORR jumped to 58%. And even more importantly, the median overall survival hit 8.9 months.
Okay, let's put that 8.9 months into context for everyone listening. What's the normal benchmark for these RR-AML patients?
And that's the key. This is a brutal disease. Historically, for this exact patient group, you're looking at maybe 4 to 6 months of survival. Hitting 8.9 months suggests this could really be a best-in-class option.
Efficacy is one thing, but safety is the other half of that coin.
Yeah.
So often you see powerful drugs that just come with unbearable toxicity.
Precisely. And that's where SLS-009 really carves out its space. The trial showed, get this, 0 dose-limiting toxicities.
Wow, no DLTs.
None. That clean safety profile is so critical. It suggests the drug could actually overcome resistance to venetoclax, which is probably the single biggest challenge in AML treatment right now.
So that combination of efficacy and safety, that's a big deal. What do they plan to do with it next?
They're being very smart. They're taking a precision oncology angle. Preclinical data showed it's highly effective in solid tumors with a specific mutation, ASXL1.
So they can expand beyond blood cancers.
Right, using a biomarker-driven strategy. They're so confident, in fact, they plan to expand the trial into newly diagnosed high-risk AML starting in the first quarter of 2026. This gives the drug a really long runway no matter what happens with GPS.
Okay, so the clinical story is compelling. Two really different, really interesting programs. But let's connect this back to the money.
Yeah.
Biotech is expensive. Can they actually afford to see these trials through?
That is always the million-dollar, or in this case, multi-million-dollar question. And they are, a typical development stage biotech. Minimal revenue and net losses. But they are getting more efficient. Their net loss actually dropped from $24.1 million to $19.2 million year over year.
But the real story is the cash they just brought in, isn't it?
Absolutely. The balance sheet looks incredibly strong now. They have 0 debt, and their current ratio is almost 5. As of September, they had about $44 million in cash. And then in October, boom, they got another $29.1 million from warrant exercises.
That's the key injection. It's like they built a war chest right before the big battle.
That's a great way to put it. Their pro forma liquidity is now around $73 million, and they've also managed their spending since the expensive part of the Regal trial, the enrollment, is now over. They've extended their runway through these catalysts.
Okay, but I have to bring up the dilution. We saw something like 35% share dilution in just a few months. That's a tough pill for any investor to swallow.
It's a key risk, for sure, and 35% is material. But the market's interpretation is all about how that money came in. It was a warrant exercise.
Meaning existing sophisticated investors chose to convert.
They chose to convert and pour another $29 million in right before the biggest data catalyst in the company's history.
So the street is reading that as a huge vote of confidence.
Exactly. It's seen as smart money doubling down, essentially funding the company at a higher valuation because they anticipate success.
That's a great transition. It sounds like the story is solid, but has the market actually bought in? What do the charts tell us?
The technicals are fascinating because they really mirror that optimism. The stock has just seen these massive surges, up over 150% in the last 12 months. The indicators are all pointing towards accumulation.
Can you break one of those down for us? Something simple for people who aren't staring at charts all day.
Sure. One of the clearest signals is the golden cross. It's pretty classic. It's when the short-term momentum, the 20-day moving average, crosses above the long-term trend, the 200-day.
And that's a big bullish signal.
It's a widely followed trend reversal signal, yeah. It suggests the momentum is now firmly with the buyers.
And it's not just chart watchers. There's institutional money behind this too, right?
Precisely. We've seen it from inside the company. A director bought a big block of shares, and externally, major players like BlackRock have taken a position. The sentiment is just overwhelmingly bullish, which is fueling some very aggressive analyst targets.
How aggressive are we talking? What's the potential upside here?
Well, the median analyst target is sitting around $7 a share. From recent prices, that implies over 200% upside. And just to contextualize that, the company's market cap is around $200 million now.
So a $7 target would put them at a valuation that assumes success.
It assumes success in these programs.
Yeah.
And that huge gap between where they are now and where they could be, that's the definition of an asymmetric opportunity.
Okay, we've laid out the potential, but we have to talk about the stakes. This is biotech. The risk is very, very real. What's the bear case here?
This is the crucial question. What if the data is bad? The number one risk is just straight up binary clinical failure. If that final Regal analysis fails to show a meaningful survival benefit, the value of GPS is just, well, it's severely impaired.
And that $73 million war chest suddenly looks like it was spent on a failed asset.
Exactly. The stock could fall dramatically. And then you also can't ignore the other asset. There's still a regulatory hurdle with SLS-009.
Ah, right, the clinical hold.
Correct. It's currently under FDA review for a full clinical hold lift. Now, the data is so positive, especially the lack of DLTs, that everyone expects it to proceed, but it is still a hurdle. Any delay just burns cash and pushes back the timeline.
So stripping away the optimism, the bear case is GPS fails, the stock craters, and then SLS 009 gets delayed, forcing them into another dilutive raise just to survive.
That is the core downside. But as we talked about, the argument is that the current low market cap has already priced in a lot of that risk. The reward for a clean win on Regal is just so much larger.
So what does this all mean for you, the listener? The core investment thesis is a classic high-risk, high-reward biotech play. It relies on two highly differentiated oncology programs, GPS and SLS 009. The company has positioned itself perfectly, armed with that $73 million buffer to get through these transformative data readouts.
The target horizon here is likely twofold. We have an imminent swing trade opportunity into that upcoming GPS readout over the next few weeks, and then a longer-term horizon spanning 6 to 24 months, holding for the long-term commercial potential and pipeline de-risking of SLS 009.
If you found this discussion useful, remember to subscribe to Smart Wealth with Joshua for daily insights and analysis.